Welcome back. We're shifting our focus to India now, in particular that country's largest power generation company, Tata Power. The stock is down this morning, despite the fact that it reported net profit jumping by more than 30% in Q4 compared to the previous year. Its renewables energy business in particular did very well, showing a 60% growth in profit. Abu Dhabi's Mubadala and BlackRock have recently announced that they will invest $500 million in that unit. Now, Tata Power is aiming to become India's leading renewables energy player by 2027. But the strong earnings picture has been overshadowed as well by what is India's worst power crisis in the past 6 or so years. Power demand is on the rise because of enormous heat waves that have been sweeping the country this summer. Many states are now grappling with prolonged power outages. Let's join Praveer Sinha. He's the Managing Director and CEO of Tata Power, joining us from Mumbai. Thank you very much indeed for joining us this morning. Great to have you on the programme. Let's just talk very quickly at the beginning about the numbers. They look pretty strong, but not quite as good as the market was expecting it would appear. Can you give us some sense about what the next set will look like to maybe cheer up some of the analysts who are a bit sceptical?
Good morning, and thank you for having me on the show. I think the fundamentals of the business has been very good, and all our businesses have done very well. There is one aberration in this quarter, and that is the mining profit that we get from Indonesia. As had happened in last quarter, in the month of January, the Indonesian government had imposed a ban on export of coal, because of which the whole of January we could not export coal, though the prices were very good. And there was a requirement that the coal has to be supplied to the domestic power producer, which is a government-owned power producer over there, at a fixed price of $70. Though the market was about $200, we did not get the benefit of that. Secondly, during the months of January to March, very heavy rains were experienced in Indonesia. Typically, monsoon comes during that period, but this time it was much severe. And because of which the mining operations got very much hampered, and thereby we could not get the upside which the market was expecting on the coal export prices. So that's the reason. We do hope that in this quarter and subsequent quarters, we'll be able to get the benefit of high coal prices, which continues to be there, and also a higher volume of coal that will get mined and exported. So we are expecting a very strong coal results for this quarter and subsequent quarters, and that will get reflected, and I'm sure the market will take care of that.
Interesting that coal is really the key point in all of this conversation, whereas part of the company's business plan has been the transition to renewable. Can we talk about how that plan is evolving, what it means for your activities with coal? And particularly, you know, like I said, India is now facing an enormous heat wave across the country, which is really putting into sharp focus the entire energy transition problem in India, given the growing demand. Tell me how you see that landscape. What is the future here, and how are you addressing it as a company?
I think many of the changes are happening too quickly for the market and for the players to really take care of the future requirement. The COVID last 2 years also had the impact on the consumption of energy. What we have seen post-COVID, that there is a huge demand of energy with all the factories and plants operating, all commercial establishments working full throttle. And I think this was not anticipated that the demand will go up so much. Just to give you a perspective, pre-COVID, we had a peak demand of something like 180 gigawatt. This year, even in the month of April, we had a peak demand of something like 207 gigawatts. So that's a huge jump that has happened, which was not anticipated, the 15% to 18% jump that has happened. Similarly, what we are seeing is that the energy prices have gone up tremendously globally. This is not only an India phenomena, but everywhere in the world. And I think that's where, again, we are seeing that this is putting a lot of pressure on the buying of imported coal for generating power. And the third is, of course, the Indian power companies, they could not anticipate the demand and did not do stocking up of coal, due to which they are struggling and they are virtually running on very low stock of coal in their plants. So I think many factors put together have put a temporary stress, I would say. I do hope the planning departments of the government and the coal companies ramp up their production so that in future that they are able to take care. Also, I think the capacity additions in renewable, which was expected, got delayed because of COVID. With more and more renewable coming in and especially meeting the peak demand of power during daytime.
Yeah, but I do want to focus, if I could, sorry to interrupt, I do want to focus on your plans for renewables and that transition.
Yeah. So as you rightly mentioned, we have entered into an agreement with Mubadala and BlackRock. That gives us a lot of money to enhance our presence in renewable. And when we talk of renewable, we will increase. Right now, we have 5 gigawatt of utility scale renewable plants. We will increase it to 25 gigawatt by 2027. So that's the 5-time jump that we are looking at. Similarly, now we are growing very fast in the distributed renewables, that is rooftop solar and solar pumps. And we are also setting up a large manufacturing plant for cell and module with an investment of nearly $500 million. So I think we are very much geared up to enhance our presence in the renewable business. And this is right from manufacturing to EPC to large utility scale, to rooftop solar, to solar pumps. The whole gamut of services that we will offer in renewable will be phenomenal.
And of course, all of this transition does take time. And given right now the focus on the power crisis across the country, sir, and the focus on improving India's energy security, how confident are you that you can make that transition to have a greater share of renewable energies while also delivering reliable power sources, while also delivering uninterrupted power to Indians?
So I think there's a whole lot of work that is happening that renewable, though it is intermittent, how can we make it 24/7? And I think some of the good solutions that we have developed, which is a combination of solar and hydro and wind, and in some cases storage also. And we have been able to do it on some pilot basis in few locations. And as we move forward, we will enhance our presence in all these areas. So we will have a combination of solar, wind, where solar will meet the peaking requirement during daytime, the wind during evening and night, and then the wind, and then the hydro plants and the storage. So I think we have a good solution with us. We'll be able to implement it, and in next 2 to 3 years, you will see that there are large number of supplies that we will do, which will be on to meet the peaking power as well as 24/7 power, and these will be reliable power.
You earlier gave some of the contributing factors to the high price of coal at the moment. Given how close you are to this issue, what is your outlook for coal prices and when do you think they might peak?
I think coal prices have already peaked. That's my understanding based on whatever reports I have seen. It will not come down very drastically in at least in next 2 quarters. But it will stabilize at the range of around $250. It's only in the next year that we expect that the coal prices will come down to less than $200.
I mean, you're certainly, like every other company in the world, affected by high energy costs and fuel prices. How close are you, sir, to an agreement with the states to be able to do a full pass-through of your fuel costs?
We are very close to that. Government has imposed emergency condition under which they will give us the full pass-through of coal for the generation that we will do from the imported coal plant at Mundra. And we do expect that the tariff will be cost reflective and will be able to take care of the higher cost of coal that we will be importing.
Thank you very much for joining us today. Praveer Sinha from Tata Power. Thank you. Well, turning our attention now to the Indian markets which have joined the trading day, we'll give you a check on the early movers when Street Signs comes back.